I'm speaking with Ernest Biasi, Treasurer of Thinktank. Ernie, thank you very much for attending the Inside Networks Alternatives Symposium. It's a great pleasure to have you here.
Thanks for having us, James. My pleasure as well.
Ernie, property-backed lending is typically described as defensive. But what, at the heart of that, what underwriting disciplines are most critical in preserving capital across the length of a credit cycle?
Well, I think for Thinktank, it's about really understanding your target market. And we focus on lending to self-employed, self-managed super funds and small businesses and supporting their journey when they're buying commercial and residential properties. So our underwriting approach has always been pretty conservative. We look for properties that are saleable and marketable in the commercial space. So really looking at that industrial segment, predominantly metro areas, properties that will have good resale in times of stress. Similarly in residential, we are looking at you're pretty much freestanding houses in major metro locations. So that's how we balance our underwriting approach, by really looking at the quality of the underlying properties.
How do loan-to-value ratios, property type exposure and borrower profile influence the resilience in specialist SME lending?
Yeah, it's a good question. And again, I think what we're really looking for at a borrower level is their ability to repay the loan. What capacity do they have? So that's really about analysing cash flows. And because we're not directly competing with bank borrowers, our borrowers tend to have more complex needs and more complex arrangements. So often they lend in trusts or companies. So we really have to understand what their debts and liabilities are, and we take an all income, all debts approach when we're assessing their serviceability. On the property side, as I mentioned previously, we are looking at location, industry type. So most of our properties in the commercial space are largely industrial. We do a little bit in retail, a little bit of strata office, but predominantly, again, we are looking at the saleability of those properties.
Thinktank balances commercial and residential property exposure. How has that mix evolved over the years, and what does it imply for risk and borrower behaviour in different economic times and circumstances?
Yeah. Again, we started our journey as a small balance commercial lender, and that's where the expertise on the credit side came from. And that's a great market. Obviously, we source our loans through the broker channel, but it's a limited market when you compare it to residential, which is a much bigger market, with much greater penetration with brokers. So our mix has we started 100%. Predominantly 100% in commercial, but now we're probably 2/3 residential and 1/3 commercial. And that's just a reflection of the different sizes of those markets. Again, our borrower set though, however, is really not that different between residential and commercial. It is self-employed, small businesses, and we're a specialist on that self-managed super fund space. So that's the type of borrower set that we're appealing to and that we're analysing.
One of the really crucial concerns for advisors is the stability of funding. So how should they assess things like warehouse facilities, securitisation programs and issuance flexibility when they're evaluating lender quality? How do they really get their heads around those factors?
I think that comes down to our track record, and Thinktank have been around now for 20 years. So when we look back 20 years ago, we started with one warehouse facility, and it took us a while to get going in the capital markets. We had to survive the global financial crisis. But we fast forward to 2025, we now have multiple funders, three domestic major banks and 3 offshore banks that support our funding, and probably 50 institutional investors that support our capital markets programs. So I think when you're analysing different non-bank lenders, clearly you've got to look at the types of assets that they're originating, but equally, I guess, their track record. And we've had a track record for 20 years with very minimal losses across our portfolio, and no losses to any investor.
When markets are stressed, Ernie, what operational and governance indicators really best signal whether a lender can execute and protect the investor's capital?
Yeah, well, again, I think it's that underwriting through the cycle and really understanding the target market that you're looking at. And again, I think we've got conservative settings around our loan-to-value ratios, so that if property prices or certain segments do come off a bit, we are still protecting borrowers, and we've seen that through a 20-year period. So again, I think the strength of our underwriting is key. We've invested a lot in, our credit personnel who assess these loans. They make up a large chunk of our operation, and because, as I mentioned, we do have more of a it's not a light touch underwriting approach. It's quite intensive given the nature of our borrowers. Having that really strong credit focus is super important when we assess our loans.
Ernest Biasi, Treasurer of Thinktank, thank you very much for attending and participating in the Insight Network's Alternative Symposium.
No worries. Thank you, James. Thanks again for having me.